Hey, welcome to the Mortgage Minute for January 21st, and the obvious big news today is the Bank of Canada shocks the market with a rate cut. I don't have any newspapers because it's all online. I've just been watching the live announcement here of Stephen Pullett's, and basically some of the key points that he mentioned was that this is a move that the bank calls insurance against the potentially destructive effects of the oil price collapse. Now, if you've been watching the Mortgage Minute for the last couple of episodes, we've been talking about the fact of keep an eye on the price of oil. I mentioned that back in October, and it's interesting looking at the price of oil, how far it's dropped. In June, oil was selling at $110 a barrel. That is now below $50 a barrel. That's more than a $60 decline. The Bank of Canada is expecting that it's going to settle in and around the $60 mark. Mr. Pullett said it is an attempt to shield highly indebted Canadian households from an oil-induced hit to their jobs and income, signs of which are already evident in Alberta. Of course, Alberta is getting a lot of flack, and a lot of the talk is about Alberta. One of the other comments is the bank also hinted at a possible spread to other parts of the country of real estate slump already underway in Alberta again. Okay, so, great news for some, scary news for others. Obviously, this global impasse of how oil is plummeting is having its effect. It's not just something that came and went. So we don't know where it's going to settle, and that's the challenge. Some of the things that I'm looking at in our local market here in Vancouver, other areas, where we are. When you look at your regional market, if you're looking at real estate per se, here's my prediction. There's a couple of interesting unintended consequences, if you will, and some interesting side effects of all this. As the price of oil goes down, it actually saves us money at the pump. I was talking to a guy the other day, and he's saving almost $300 a month in gas alone, and that goes across the country. That puts money back in the average consumer's pocket. So the price of oil and the drop in energy pricing is not necessarily a bad thing for us as consumers in the economy. Add to that interest rates are now, the Bank of Canada, the prime rate's down by quarter point. So if you're floating on a variable rate mortgage today, you just saved money. Your interest rate just went down. If you're looking to get a fixed rate mortgage, the bond yields have also dropped. So your long-term fixed rates across the board yesterday didn't get as much news, but almost every lender dropped their long-term fixed rates. Again, something we predicted 2 weeks ago. And the Canadian dollar is going to take a hit as a result of this. Terrible news if you're heading down to the States for a holiday in the next few weeks, but great news for Ontario and their economy because they are a manufacturing-based sector. So anybody that is looking to export items from Canada will benefit from a lower Canadian dollar. So a lot of this actually is good news for the average home buyer. One of the things I'm looking at, again, going back to the local real estate market, unintended consequence, is that the Bank of Canada and the government have been talking about for months, if not years, that Canadians are overburdened with too much debt. They're very concerned that you're going to use your house as an ATM machine. So one of the ways they could have controlled that would be to raise interest rates to slow down what they perceive as an already overheated housing market. Well, this is the exact opposite. They're not raising rates, they're lowering rates. And one of the comments says the bank said the economy won't return to full capacity until the end of 2016. So you have an almost virtual guaranteed a prolonged period of almost 2 years of this low interest rate environment, meaning it's not going to slow down the housing market, but the government wants you to slow down the housing market. So here's my prediction. I predict we will have an announcement within the next month of changes to mortgage rules. They're going to try to pinpoint further mortgage rules. There's going to be a lot of saber rattling. They're going to try to talk the market down. They're going to try to scare people into not spending more money. And if they do have mortgage rule changes, those will kick in March or April or May. Therefore, look for a bit of a rush on the market, people getting in while they can, and there'll be a rush into the market while interest rates are low and there's no rule changes to the mortgages, and that will have an unintended consequences of actually increasing prices in the short term. That's my prediction as a follow-up from today's announcement. Lots of interesting stuff going on. We will always keep you posted and updated. For now, that's the Mortgage Minute for today. We'll talk to you soon. Again, as always, if you have any questions, please send me an email. Happy to answer them. Bye for now.